Hey, how you doing? This is Peter with the McKernan Group. Just want to talk a little bit about, there's a form that always comes up in it, especially if you're selling a rental property. It comes up in escrow. You get a full escrow packet as a seller, and so this goes out to all the sellers that are selling an investment property or a rental. One form is the 593. It's E593 form. So what is that form? That form is for the IRS and also escrow to see how much you made on the property if you're selling it. It's not for a primary residence. So if you're selling a property and you made profits of $100,000, well, it gives you a complete breakdown of, okay, almost like a math problem. Like, okay, well, I bought it for $200,000 and we're selling it for $350,000 and the real estate fees were $50,000. You can put everything on there, and I want to go over it a little bit and just chat about what it was, because a lot of people come to me with a lot of questions about it, and I could see why, because it's not normal to, really analyze, okay, well, what did I spend on the property? What did I do to the property? And ultimately, what is that property going to create as a tax liability for me when it comes up to taxes? So the E593 is basically just showing like, okay, well, I bought it for $350. I'm selling it for, I bought it for $200. I'm selling it for $350 and $50K in any type of, expenses. If it's realtor expenses, including, escrow, title, I paid for termite and maybe a natural hazard disclosure and a couple other things. Also, what you can add in there is anything you've done on the property. So if you put on a new roof, add that in there. New roof was $20K. Okay, we add that in there. So that's deducted on the sale. And then also, if you bought the property and you still have the closing disclosure or the closing statement saying like, okay, well, I paid $5,000 in closing costs, you can put that in there too. So all of a sudden, instead of getting taxed on $100,000, you're only getting taxed on $75K, because the profit was $150,000, then you take away the real estate fees and all that, that's $50,000. You put a new roof on it, that's $20,000 taken away from that. And then all of a sudden you paid $5,000 in closing costs when you bought the property. So all of a sudden now it's $75,000 that you're getting taxed on. Because you incurred those expenses when you own the property. So look at that. Make sure you, for one, keep diligent records of every property that you've owned through doing a profit and loss statement, doing a balance sheet, and then also, putting your files away in a, file cabinet, or putting your files away in Dropbox or Google Sheets. Make sure you have all that stuff lined out so you can give it to your CPA each year or when you sell it. And then make sure when you're going to go file this as the 593, because you're going to get taxed at the end of the year at a certain amount, you have all that information, because if you ever get audited, that's a problem too, right? So you got to make sure all that stuff's lined out, so when you go sell it, you're good to go and you're saving that money too. So E593, if you have any questions, leave them below.